Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Jonathan Dharmapalan, CEO of eCurrency, a company that promises central banks a turnkey technology to enable them to securely and efficiently issue digital fiat currency. In other words, central bank digital currency, or CBDC, alongside notes and coins. Jonathan, thanks very much for joining us.
Thank you for having me, Dominic.
Now, if you followed carefully what I just said, eCurrency is promising a digital version of physical fiat currency, notes and coins, owned by whoever owns them. In other words, it's going to be a bearer currency. Is that a fair summary of what you offer?
Yes, that is a fair summary. Of course, eCurrency does not actually mint or produce that currency. We produce the technology that then central banks subsequently use to mint and produce that currency. But yes, it's intended to complement notes and coins as simply another form of fiat currency.
And as you've just said, the central banks are actually going to use your technology to mint this digital fiat currency. How are they going to make that available to the people who need it, to the banks, to the payment service providers, the merchants, eventually, of course, to consumers?
The essential nature of what we have enabled are three processes. One is the process by which a central bank creates the currency, minting, essentially. That then allows a central bank to take the minted currency and put it through existing intermediaries for purposes of circulation. And for the most part, the intermediaries that distribute physical currency today happen to be banks. But I anticipate that in the future, in addition to banks, there will be other fintech and or e-money enabled technologies and service providers who can disseminate the central bank currency into the hands of the public.
As you've just pointed out, 80–90% of money in circulation is commercial bank money created by commercial banks. As you look forward, as this technology is implemented, do you anticipate there will be a sort of one-to-one replacement of physical notes and coins, which are the only form of central bank money which the man or woman in the street can access these days? It's sitting there on the central bank balance sheet. Do you expect that the notes and coins component on a central bank balance sheet to be replaced one-to-one with this new form of digital fiat currency and everything else remain the same? Or as a result of this new digital fiat currency, there are going to be wider effects on commercial bank money creation? Is this going to have effects beyond the obvious, in other words?
Well, there's essentially sort of two commonly known forms of central bank money. And in some situations, there's a third. So the two commonly known forms of central bank money are physical cash and central bank money that is then used by commercial banks for purposes of bank settlements to take place. The third form of central bank money in certain countries happen to be various forms of treasury bills or notes that a central bank offers their public. But if you go to the first two forms, physical cash, which we typically think of as M0, currency in circulation, is directly available to the public to use. The reserve money, at least the settlement money that banks use to settle amongst themselves, is not available to the public for use. So what we see is that the physical cash that's available for the public to use to be complemented by another form of money, which is digital currency. How soon or how fast the physical cash that we know of as notes and coins disappears is really up to the nature of how quickly the public adopts the use of that digital currency. So over time, we would expect that digital currency adoption will slowly increase and the existence of physical cash will slowly decrease. Whether or not it would go completely out of circulation, well, I personally, frankly, doubt it'll go completely out of circulation, that physical cash will go out of circulation, but we'd probably anticipate some kind of an asymptotic curve as the use of physical cash drops and the use of digital currency increases.
Well, I'll come back to you on one reason why physical cash might survive. But before I do, I'd like to pick up one of the points you made about the central bank reserve form of central bank money, which is, as you rightly pointed out, used between the banks to settle gross what they owe to each other every day, sometimes more than once a day. What is the impact of digital fiat currency going to have on what has become quite a complex payments infrastructure in developed economies, where you've got these real-time gross settlement systems at the central bank, where the banks finally settle what they owe to each other? But that's gone through automated clearinghouses where it's been netted, and they themselves are, of course, aggregating all sorts of payments which have gone not just through banks, but through payment service providers, through credit card networks, through mobile applications, and so on. Do you think that this digital form of fiat currency is going to affect that that definitely complex ecosystem or infrastructure of payment systems? This is a digital bearer form of currency. Is it going to affect the way payments are aggregated, netted, settled inside central banks?
Well, effect is a very broad term, and it's very hard for us to predict how things play out. But the essential nature of what banks do is different than just simply enabling payments. Banks have a role in the creation of money and the growth of economies. So in addition to settling at a central bank, a commercial bank actually allows for loans and other financial instruments to be made available to the public. And they use these instruments, or the public uses these instruments to actually enable and grow the economy. Central bank digital currency does not necessarily play a role in the creation of these forms of instruments and the intermediation that commercial banks actually do. Now, will we see acceleration in the ability to either make deposits or withdrawals, or to essentially enable these loans to flow more efficiently through the economy? Yes, digitalization does create economies of scale, does eliminate certain forms of friction that the physical nature of money sometimes creates. So we would see some amount of expediency there, but we don't necessarily see commercial bank businesses to be disintermediated, because what commercial banks do is different than just merely enabling payments.
You're implying that the velocity of money will increase, and that's a very interesting point. Perhaps we'll come back to that.
Sure.
I promised first to talk to you about why physical notes and coins might actually survive, and one obvious reason is that physical currency is anonymous. It's not traceable. You pay people the money, they don't have to know anything more about you other than that you're good for the money. Is this digital bearer form of fiat currency also going to be untraceable?
If we are to maintain some of the precepts that have made transactions what they are in physical form, I would expect that the public's privacy will be preserved. Now, of course, in many of our democracies, we take that right and that privilege for granted. But it is not necessarily the case that someone intended for privacy to exist in the exchange of physical currency. It just happens to be a characteristic of physical currency that I don't think was intended one way or the other. However, in many of our countries and economies, the privacy of individuals from government intrusion is captured in our laws and our constitutions. And as a result, we would expect that that privacy would continue in a world of digital currency. If the laws require it, the technology to support those concepts or precepts should maintain and should transcend the transformation from physical to digital currency.
Okay, here's a reason why physical notes and coins might not survive, and that's that they're insecure. If they're stolen, it's a bearer instrument. You've lost the money. If your dog eats it, again, it's a bearer instrument. You can't retrieve it. So you totally lose the value of the money. Is the same going to be true of digital bearer fiat currency?
Well, this is a trade-off that we are going to have to consider, and central banks are going to have to consider. If there is no association of the digital currency with the holder, and the holder happens to drop that digital currency in the lake, their ability to execute that digital currency will go away. The digital currency itself doesn't disappear. It's just your ability to execute its power, meaning to spend it, goes away. However, if you're willing to somehow maintain proof that you are the owner of that digital currency, and you're willing to provide that proof in an event where that digital currency is somehow either misplaced or lost, in the digital world, it is possible to regain the power to use that digital currency. The trade-off here is, again, the point you made earlier, which is privacy. Who are you willing to expose the fact that you own that digital currency to? And who is going to be the arbiter of that proof, and who is going to then replenish the currency you claim you've lost? If that is to be the central bank, then you are likely to give up some amount of privacy to the central bank. If that is going to be some form of an intermediary, whether that be a commercial bank or a technology service provider of some sort, or a wallet service provider, or some custody holder, then you're giving up a certain amount of privacy to that entity. So these trade-offs will have to be either decided through policy or decided as a practical matter when they happen to take place.
As you just pointed out, there are trade-offs here. This might be a turnkey technology, but it doesn't answer all the questions a central bank might have. Those trade-offs devolve, I suppose, in my own mind into a kind of trilemma between convenience, privacy, which you've just talked about quite a bit, and of course, security, the risk that the dog eats your notes. Now, presumably, different central banks are going to strike a different balance between those three factors. Do you have any sense yet of where central banks are tending in terms of the balance, the trade-off, but to use your phrase, between convenience, privacy, and security?
Well, I actually don't think that's a set of trade-offs that the central banks have to worry about. I frankly think that the general public has to worry about those sort of that trifecta of trade-offs. And I've been frequently told security, privacy, and convenience, you can have two of those. You can't have all three at the same time. I think the trade-off that the central banks have to be thinking about happen to be a bit different. What the central banks have to frankly think about in a digital currency world is the non-counterfeitability of the currency they have created. In other words, that they can rest assured that only what they've created is in circulation, no more, no less. If there needs to be more, only they are in a position to increase that currency in circulation, and only they are in a position to decrease that currency in circulation. This is the issue that central banks have to contend with, for starters. From there, they have to worry more about whether or not the currency they have created is useful to the public, as in, is it convenient to use? Does it apply to day-to-day practical issues that the people face? And does it apply to our easing our lives or greasing the skids for our removing friction from our transactions. Once those are solved, the public will, I believe, make decisions about the trade-offs between privacy, security, and convenience.
Many of these trade-offs are, in fact, historical, aren't they? And I'm often struck by how long we've been talking about digital money. In fact, we used to talk about e-money in the 1990s. We were probably talking about it in the 1980s. I just can't remember. But one of the things that struck me as interesting about your business is actually eCurrency long predates central bank digital currencies, stable coins, tokenized deposits, which have given, and of course cryptocurrencies, which have given such new life to this debate about digital money. So when CBDCs came along, did you think, oh, that's what eCurrency is all about? We're all about central bank digital currency, or were you thinking differently?
No, I think from the very start, we started to recognize that money itself was being abstracted. It was being abstracted in many different ways. Cryptocurrencies just being sort of one branch of this abstraction. The real abstraction was that we were executing transactions without actually being in the same place at the same time as the people we were transacting with, whether that it was me sending money to a college student or it was me buying an item on the internet. We were transacting and transcending space and time in our transactions. So it became quite obvious to us that money itself will need to transcend space and time. The question then was, whose money was it going to be? Was it going to be purely a privately enabled form of money, whether that be e-money or credit that's extended to us by credit cards, or was there going to be a public money that could transcend space and time? And it seemed inevitable to us that at some point the central banks would realize that there was a call upon them to provide that public good, which is currency, except that they would provide that public good in a manner that would transcend space and time, that being digital. And so we got to wondering, how would a central bank then create this instrument, a non-counterfeitable digital item, and put it into circulation in such a way that that you and I could use on a daily basis. And even though we didn't call it central bank digital currency in those days, that's essentially what we had imagined. And we set about trying to build the technology, and I think we've succeeded at it, that central banks can then use to mint this currency and to put it into circulation. That's sort of the history of where eCurrency comes from.
Well, the history of e-money is itself quite interesting because, of course, e-money now means something very specific. It means a 100% cash reserved payment token, if you like. And it was a form of money created to deal with exactly the problem you alluded to. The internet came along. You need money which is free of time and space to handle e-commerce on the internet. And now the internet has evolved again, and may eventually evolve into the metaverse, but it's certainly one of its new facets, if you like, is blockchain. And I wonder how you see blockchain technology, which has given us these cryptocurrencies. It's created this need, cryptocurrency trading's created this need for stable coins. It's given rise in a rather circuitous way to tokenized deposits. But do you think blockchain technology has a long-term role here, or is it just a complete red herring for central banks looking to create a CBDC? How much does blockchain technology matter to central banks?
Well, you sort of asked the question about whether blockchain in itself is a red herring to central banks.
Yes.
It may well be a bit of a wake-up call, and it's an umbrella under which various forms of creating and or executing transactions might fall. But I believe that we have to look beyond sort of blockchain technology itself. look under the covers to see what it is that actually creates the possibility of a secure digital item. What creates a possibility of a secure digital item, it happens to be cryptography. Blockchain uses cryptography, and I believe that any digital currency or central bank digital currency will also use cryptography. So the effective use of cryptography, which blockchain happens to have, but is not limited to blockchain, will become a key component or a key enabler of what a central bank digital currency becomes. Now, one of the reasons why that cryptography evolved into what we think of as blockchain or distributed ledger is because there was an attempt by those promoting this to create trust without a trust entity. Hence the block and hence the chain. So without actually getting into more detail about how blockchain works, if we are talking about a central bank digital currency, we are already saying that there is a trust entity, which happens to be the central bank. And as that trust entity using cryptographic protocols, they should be able to create a secure digital item without using blockchain. So yes, I think blockchain was a bit of a wake-up call for central banks, but whether or not central banks will ultimately end up using blockchain itself, I think is doubtful. However, will central banks use the mechanics behind blockchain, such as cryptography? I believe that that would be the case, yes.
If I've
Long answer to a simple question.
Yeah, but if I've understood you correctly, what matters is not the technological protocol, if you like, it's the cryptography that matters. And how important is that, if you're looking at this from the point of view of a central bank, is explaining that to them difficult? How easy is it for rivals to central banks to make use of the same cryptographical techniques to create competitors to central bank money? What's the balance, in a way, between the role of the central bank as a trusted intermediary, which you've just pointed out, and the role of cryptography to create a kind of trustless alternative to that? Is the central bank creates the best of both worlds by being both trusted and secure, but also capable of using cryptographical techniques? I'm rambling a bit here, but I'm wondering how important that cryptography is to the long run success of your prescription for the future of digital fiat currency.
Well, it has already created that question, because there are various parties out there who have claimed that there is no need for a central bank, and that we can put our trust in the code, and that there is no reason to have a trusted party as a central bank somehow being the arbiter or the supplier of currency for common use. In other words, you and I and several of my friends can get together and decide what a currency is, and off we go. I think in the theoretical realm, that's an interesting conversation. But the reality of it is, in a trustless world, or in a lawless world, the lawless abide. And I think we have seen, and I will not quote the examples, that the tendency for trust placed in code to veer off and go off the rails, so to speak, is quite high. So despite the theoretical promise of a trustless currency, the reality of it is I don't think that has managed to become a reality. I frankly do believe that central banks and a trust entity is necessary. Hence the bet we have placed that building a technology for them to empower them to do what it is they do, which is to provide a trusted, legally viable currency instrument, is what will survive in the long run.
Let's assume a central bank mints this digital fiat currency, which is cryptographically secured. How is it going to be distributed to the people who need to use it? How are the users actually going to hold this currency? Are they going to have digital wallets? Presumably they're not going to all have accounts, as it were, at the central bank. Are they going to use digital wallets? Is that your vision?
Well, yes. So there were sort of two questions embedded there. How is it going to get distributed? And then how is someone going to hold it?
Yeah.
Central banks today have a very particular mechanism they use to distribute currency. And this is almost universally true. There are a few exceptions. For the most part, central banks use intermediaries like banks and potentially some other financial institutions to take currency that they produce, the currency that they mint and issue, to get it into the hands of the public. They almost never attempt to get it in the hands of the public directly. Although I can think of a few examples where you and I could go to the central bank and ask for currency in exchange for some value asset. But for the most part, they use intermediaries. In other words, they have rails that they use to send currency out from the central bank, into the realm of public use. In the short or the medium term, central banks will continue to use those mechanisms to get that currency distributed. However, they don't have to be limited by the mechanisms they have today. There are numerous ways in which central banks can distribute currency to the public, but I doubt they will bypass existing intermediaries in the short to medium term. Oh,
Cash.
to the second part of your question,
Right.
which is how will the public hold the currency? Yes, they will hold that currency in secured wallets. And I say secured wallets because I don't anticipate a time where someone will write down a cryptographic code on a piece of paper, which they will recall later in the hopes of finding their currency. I do believe that either intermediaries or other custody service providers will provide secure wallets, or secure wallets will be created in handheld devices like our smartphones and or our smart cards, in which you and I can hold central bank digital currency.
So just to follow up on that point, this is not going to be like a cryptocurrency where you don't, if you lose your PIN, you lose your currency. After all, I mean, are you, to put the question plainly, do you think cryptocurrencies are now a sideshow? You know, if we'd had this conversation 2 or 3 years ago, we might have you might have given a different answer to it. But cryptocurrencies arrived because these cypherpunks had lost faith in fiat currency. You're now putting forward a proposition to totally rejuvenate fiat currency and make it available in a digital bearer form. Do you think the cryptocurrency, I'm about to call it a delusion, illusion, dream, let's call it a dream, do you think the cryptocurrency dream is over now and it's going to remain a sideshow going forward?
Well, I hate to try to predict the future there, but calling a cryptocurrency a currency in any form may well be a misnomer. I believe that there are certain characteristics that make a currency, and it starts with the law. In other words, what makes a US dollar is the laws of the United States. What makes an Indian rupee are the laws of the nation of India. So these underpinnings have nothing to do with whether they're cryptographically encoded or printed on pretty green colored pieces of paper. It really has to do with the fact that the law of the land enables that currency to exist. We haven't seen, except in sort of odd circumstances, any law supporting the existence of a cryptocurrency. So by definition, a cryptocurrency is not a currency at all. It is some commodity or asset, and I know that's being debated, whether it's a commodity or an asset. or an investment vehicle. It may be one or all of those, but I doubt very much that it's a currency.
To say nothing of the fact that the US dollar and the Indian rupee are backed by the taxpayers of the United States and in India as well, whereas a cryptocurrency isn't backed by anything at all, I suppose. Now, what you're making available here is cash in digital form. Cash use is declining in most of the major economies. Do you expect making it available in a digital form will increase the amount of cash in circulation or decrease the amount of cash? Seems to me central banks are quite keen on decreasing the amount of physical cash in circulation. Do you expect digital cash to reverse that trend?
I believe that it's our need to, and convenience is a component of it. The need to, again, transcend space and time have become a component of it. Our need to stop being physically tied to the execution of transactions is what is causing cash use to drop in certain economies. It is not the fact that the central banks are not willing to provide a capability to the public that they can use. So the cash use is dropping merely because the use of no different than the use of a pen and a piece of paper. We have stopped using pieces of paper and pen, or we have reduced the use of pieces of paper and pen because we are storing our information more and more digitally. Whether or not central banks react to that is partly an open question. When we stop using cash, should everyone be forced into an environment where they are using purely privately provided forms of money, whether that be credit or debit or e-money? Or is there a role for the central bank to provide this public good, which we think of as currency, in digital form? It appears that that question is being answered by central banks. I think central banks are stepping up to say that they should have, the public should have the option to use currency, not necessarily credit all the time, or not necessarily e-money all the time. And can it be made available to the public at a very cost-effective, cost-neutral form? These are questions that are being answered, and I believe that central banks will make the right choices, at least from our point of view, which is, yes, there is a role for the central bank to provide the public good that we think of as cash. And if the public isn't using a digital form of that cash, I'm sorry, if they're not using a physical form of that cash, a digital form should be made available. You sort of think about this as a transformation where central banks are providing coins, and coins started to become very inconvenient. And so the central banks decided, okay, we're going to make it more convenient by producing notes. Well, notes are becoming inconvenient. So it's time for the central banks to think about providing digital notes.
Okay. I'd like to make sure I understand what you're saying, because as you point out, physical currency is useless in e-commerce. One area where it actually remains useful, of course, is among people who are excluded from the banking system. They don't have access to current digital forms of money through the banking system. They use cash to make payments and to get paid. And we saw a live experiment of this in India, where the Indian government tried to dispose of one particularly large denomination note, and it caused a great deal of difficulty. So do you think making fiat currency available in this digital form will decrease what's called financial exclusion from the banking system? Or the converse of that, obviously, is increase inclusion within the central bank controlled system. What's the impact of this going to be on people who don't have bank accounts, to put it plainly?
Well, I go back to my point that currency is underpinned by the law. And as such, it is a very inclusionary form of enabling transactions, meaning if I am holding a $10 bill in my hand, it has exactly the same power as you holding that $10 bill in your hand, or my child holding that same $10 bill in their hands, because it is legal tender that carries its power and weight upon itself. It has nothing to do with who's holding it. The banking system, at least as we have built it, is a very discriminatory system. It's not an inclusive system. It is highly discriminatory. It makes decisions about your creditworthiness. It makes decisions about how much you're able to keep in a bank account. It requires you to have certain characteristics like a home address, a driver's license, a name, a recognized form of identification, etc., none of which are required in the cash world. So how do you bridge that gap between a highly discriminatory system, which we think of as the financial system or the banking system, and a very inclusive form of money, which happens to be cash? Does digital inclusion enable that? We believe so.
Now, digital currencies, you don't just, need a bank account. Perhaps you don't need a bank account at all, but you certainly need electricity and you need the internet. You need access to both of those things. So even if this digital fiat currency is more inclusive of people currently excluded from the banking system, how's it going to work if there's no electricity, either temporarily or permanently, and there's no internet, either temporarily or permanently? What happens if you don't have access to those two vital things?
Well, to a great extent, these are sort of conditions that need to exist for a digital currency, or frankly, any digital anything to exist. So imagine a time when someone invents a light bulb and you ask the same question: how is my light bulb going to work if there is no electricity? Well, the answer is my light bulb is not going to work. But that's not a reason for not inventing the light bulb. You'd still invent the light bulb, and you find a way to make sure that electricity is available most of the time, if not all of the time. So I believe digital currency sort of goes down that sort of same way of thinking. The functionality of digital currency is actually worth creating and making the necessary arrangements to make sure that electricity is available at all times, and the internet is available at all times, or connectivity is available at all times, is table stakes. You have to assume that to even imagine a digital currency. Now, should we have other mechanisms should electricity fail or the internet fail? Yes, the answer is yes. We have flashlights. So we invented the light bulb, we put electricity out there, but if it happens to go out, we have another mechanism called a flashlight to bridge us through the times when we don't have electricity. Well, a digital currency world would also create those options: the ability to store digital currency offline with or without power or the internet, and the ability to execute digital currency offline with or without power or the internet. But these are temporary measures to get us through circumstances when, like you said, electricity and or the internet is not available. But this is not a reason not to invent the light bulb, and it's certainly not a reason not to invent digital currency.
Okay. So you can still exchange this stuff using two battery-powered telephones, I guess, is what you're really saying. And now you've been very clear that the central bank is a crucial component, which our cypherpunk friends would disagree, but you're clear about that because it's a trusted intermediary. What is digital fiat currency available in bearer form, this digital form of physical cash, going to do to central bank control of monetary policy, of monetary conditions? Right at the beginning of our conversation, you hinted that you thought this would accelerate the velocity of money in the economy. Do you think there are other effects which it will either enhance the control of the central bank over monetary conditions or do the opposite to central bank control of monetary conditions? What do you think the impact's going to be of this model of money?
So there are sort of extremes, or there are different ways in which a central bank can make central bank money available to the public. One mechanism that has been suggested is to give everyone access to the balance sheet of a central bank. In other words, give everybody an account at the central bank. Theoretically, that would enable you and I to execute transactions in central bank money directly at the central bank. But central banks aren't geared up to do that. And it would be sort of practically impossible to provide the customer support to large populations by a central bank because I happen to have an account at the central bank. So there are practical reasons why that may or may not make sense. The reason why we think of this as a bearer instrument is because we're taking the power of central bank money, except we are massively decentralizing it into your pocket, right? By doing so, we expect that the friction that's created in executing transactions between you and I will lessen. Will that change monetary policy? Not necessarily. So in as much as a central bank expects to keep their M0 stable and they introduce central bank digital currency, they would likely take some physical currency out of circulation and nothing's changed. However, a central bank may look at some form of expansionist models and choose to provide more liquidity under certain circumstances directly to the public or through intermediaries to the public. And we've seen that happen, by the way. We saw it happen during the pandemic. And they may choose to use digital currency as one, if not one of many mechanisms to execute policy through central bank digital currency under emergency circumstances, under crisis circumstances, under pandemic circumstances, who knows? But it's not a given that central bank digital currency will cause policy changes. Policy changes with policy changes is just a question of a central bank choosing this as one more lever to execute that change. Did I answer your question?
You did. In fact, I've been thinking you've given very clear and articulate answers to all the questions I've raised. You've been thinking about these things, you've thought them through, you've been at this a long time, which brings me, I think, to my what I think will be my penultimate question, which is, how much traction are you getting with your model? How many central banks have bought your technology? How many are in your pipeline?
I believe that that central banks are going through a long, careful thought process about how they want to take advantage of the ability to digitize or digitalize the currency that they produce. Different central banks are evolving through testing various technology components to see if this is even practical. However, we are now coming to a point where technology itself is not the challenge. We believe the technology to do this, not necessarily just ours, but the technology to do this already exists. The bigger challenges are, can central banks and countries and sovereigns and nations modify or evolve their laws to support a digital form of central bank money? Today's laws may or may not support that, because when the laws were written, nobody had anticipated the possibility of a central bank digital currency. Now that it's here, evaluating those and putting the right laws, regulations, and policies in place is, I believe, a major challenge. And I think central banks are starting to think very carefully about it. The second challenge is that the public has either not gotten used to using digital money, or where they have been trained to use privately issued digital monies and not necessarily central bank issued digital monies. And to be able to provide a central bank digital money as an alternative and to train the public to use it is probably going to be the next large challenge, meaning what is adoption going to look like? How do people choose to adopt this digital form of cash? I think once central banks work their way through those two challenges, we will start to see significant adoption. In my personal experience, there are at least 80 central banks that are talking their way through this issue.
Whatever those central banks are doing and thinking, you're involved in something which is very significant and very ambitious. And this is my last question, I promise. What's the personal story that brought you to this business, which is so ambitious, so important to the future? How did you get here?
When a new technology becomes possible, there's frequently a rush to use that technology to potentially hijack a space. Meaning, when the internet became possible, there was a rush to capitalize on that internet, which was always intended as a public good by its creators. But there is an attempt to hijack it for purely commercial purposes. Now that money is about to become digitalized, or it is becoming digitalized, there will be several efforts to use its power to essentially hijack what has been frequently thought of as a public good, I keep telling you, which is currency. When I saw that sort of divergence happen, it sort of drove me and several of my colleagues to sort of think about, how do we keep this public good a public good in a digital world? Is it even possible? Or do we just sort of write it off and give up on the public good, give up on our privacy, give up on our ability to enable the equal power of currency in everyone's hands? And the answer basically came back that sooner or later central banks will wake up to this, and sooner or later central banks will provide currency in a digital form. And so we chose to play our small role in enabling that.
So your real motivation was your concern about the privatization of a public good. Is that right?
You said it better than I did. Yes, thank you. I will use that very quote. Yes, we were afraid of the privatization of a public good.
Okay, well, feel free. I'm glad to have been able to give you something. Jonathan Dharmapalan, thanks so much for taking the time to share your insights and knowledge